Simon Irwin, a retail analyst at Liberum Capital. Simon, good to see you. So how is Inditex doing so well in such a tough environment?
I think it's down to a number of things. The main thing is that they have the most responsive supply chain in the industry. And that for years some of their peers have been increasing sourcing out of Asia. Inditex have stuck with their proximity sourcing model, and as a result of which they are able to get product into market considerably faster than peers, and consumers notice that. They know that if they want the latest styles and fashions, that they can go to the Inditex formats, principally Zara, and always get the right product, well built, at the right time.
Because Inditex shares have gained some 13% this year in Madrid, haven't they? Their nearest rival, H&M, Hennes and Mauritz, has slumped 11%. So, I mean, that's quite a discrepancy if you compare these two. So what else is behind their outperformance when you compare them to their peers?
Well, firstly, the difference in the sourcing models between the two has been very advantageous to the Asian companies for years, but suddenly now, with life in Asia becoming much more expensive, then suddenly Inditex now has a comparative advantage in Europe.
Because they stuck with Europe when others were going east.
Precisely. And the second, which is just starting to come through now, is e-commerce. They reported 6% like-for-likes in the first half, which is astonishingly strong. And you have to assume that e-commerce, which was only launched in September last year, is now starting to drive some quite significant volumes of sales.
Worth mentioning that they are actually expanding, aren't they? Because the Inditex are adding outlets in places like China and other emerging markets and reducing their exposure to Spain and Southern Europe. So is that the sort of strategy we are seeing many retailers? Is that the sort of strategy they have to continue pursuing, investing in emerging markets if they're going to maintain revenues and profits?
Definitely. Firstly, they're in more than 70 countries, so they have completely nailed the ability to go into new markets profitably and expand very rapidly. And space growth is growing at about 10% per annum. So, as you say, they're growing out of their mature markets in Europe very, very fast.
All right, but really the thing that's hurting all these retailers right now is, input costs are rising, price of cotton has been rising, and effectively this makes it more expensive to make these garments. So how much is that eating into profits? Well,
gross margins in the first half were down about 100 basis points, or 1%. And the guidance for the second half is something broadly similar. Input costs will probably peak during the second half of the year, and then going into next year there'll be much less pressure from raw materials. There'll be a little bit for the Asian source companies because of labour prices, but by the time we get into the spring next year, we will be past the worst.
What about efforts to pass on these rising prices? How has that been going down with consumers?
Across the industry, it's been pretty mixed, as you see from the poor performance of a lot of the apparel retailers, H&M being one. A lot of the Americans are having a pretty miserable time, and the second half promises to be even worse. But Inditex are seeing less cost inflation, and they're passing less on. Their average prices in the first half were broadly flat, and again, I think consumers noticed that and responded with strong sales growth.
You mentioned the US there, and of course we're seeing Walmart and dollar stores doing extremely well, and there's certainly the reaction from investors has been favourable as well. How does that compare to the situation in Europe? How are mass stores, discount stores, retailers targeting the youth? How are they doing in comparison?
I think the youth market in Europe is pretty tough. Youth unemployment is extremely high, so it's also one of the most competitive parts of the market as well. Everyone's always chasing the youth market. So youth is probably tough. Inditex is a very, very broad church, particularly Zara, do cater for kind of an age group well up into the 30s and 40s, so they are somewhat protected from that pressure. But generally, we see continued pressure on apparel sales in Europe in the second half.
Broad demographic giving Inditex a boost. Thanks very much.
No problem.
Simon Irwin, retail analyst at Liberum Capital.